Saudi Arabia sits on top of some of the largest oil reserves on Earth. Oil made it staggeringly rich, and right now it is spending hundreds of billions of dollars trying to get off it as fast as it possibly can. So here's the puzzle. Why would the world's oil superpower be desperate to quit the very thing that made it? Today, we follow the money to find out. Look at what Saudi Arabia is doing, and it seems almost contradictory. It's building futuristic megacities in the desert, hosting global golf tournaments and football stars, pouring money into tourism, entertainment, and technology. All of it aimed at one goal, needing oil less. And there's real urgency behind it. Even with oil recently trading above $100 a barrel, Saudi Arabia is still running a budget deficit, and it has quietly scaled back its most famous project, a giant future city called NEOM. When a country this rich in oil is spending more than it earns, something deeper is going on. To understand it, you have to understand the trap the kingdom is in. Economists call it the resource curse. For decades, oil was pure magic. You pump it out of the ground, sell it to the world, and get rich. It built modern Saudi Arabia, the highways, the cities, the wealth. But depending on a single commodity carries a hidden danger. Today, oil still provides around 60% of the Saudi government's revenue and roughly 40% of the entire economy. That means the country's fortunes rise and fall on one number, the price of oil, a number it does not fully control. When oil is expensive, money floods in. When the price crashes, the government's budget and the whole economy crater with it. It's like a family whose entire income depends on one unpredictable paycheck. That family is now watching two clocks tick down at the same time. The first clock is price. To balance its budget, Saudi Arabia needs oil to stay somewhere around $80 to $90 a barrel, and even higher to fund its grand ambitions. That's called the fiscal break-even price. The problem is that oil regularly falls below it. So in the quiet years, the kingdom runs deficits and dips into its savings, always hostage to the next price swing. The second clock is bigger and scarier for them. The world is slowly moving away from oil. Electric cars, solar power, and cleaner energy are spreading. It might take decades, but Saudi leaders can see the horizon, a future where global demand for oil peaks and then begins to fall forever. And if your entire economy is built on a product the rest of the world is actively trying to phase out, then you are living on borrowed time. So Saudi Arabia made a bold decision. Use the oil money now, while it still flows, to build an economy that won't need oil later. That plan has a name, Vision 2030. Launched in 2016 by Crown Prince Mohammed bin Salman, Vision 2030 is a sweeping bet to transform the kingdom. The strategy is to pour oil wealth into brand new industries, tourism, entertainment, sport, technology, finance, and manufacturing, so that one day those can pay the bills instead. In short, spend the oil fortune to escape the oil trap. You can see the bets everywhere. NEOM, a $500 billion plan for futuristic cities in the desert, luxury Red Sea resorts, as the kingdom throws open its doors to tourists for the first time. Billions spent on football, golf, and the right to host the 2034 World Cup. And behind it all, the Public Investment Fund, a gigantic sovereign wealth fund investing in companies all over the world, from tech to gaming, building income streams that have nothing to do with oil. But here's the catch. Escaping oil is far harder than it sounds. Start with the cruel irony. All of this transformation costs an enormous amount of money, and most of that money still comes from oil. So when oil prices are low, Saudi Arabia has less cash to fund its own escape from oil. The very thing it's trying to leave is what's paying for the exit, and the strain is already showing. NEOM has been scaled back, with major contracts canceled. The Sovereign Wealth Fund cut its spending by around a fifth. The deficits keep coming. Diversification is genuinely happening. The non-oil part of the economy has grown to more than half of output, but the deeper goal, shrinking oil to a minor share, is running behind schedule. Building entire new industries and reshaping a traditional society simply takes time the clocks may not give. So why should any of this matter to you, wherever you live? Because Saudi Arabia is the world's swing producer, the one country that can raise or cut oil output enough to move the global price. Its choices ripple straight into the fuel and food prices we talked about before. If its grand plan succeeds, a diversified Gulf becomes a financial powerhouse, its wealth fund quietly owning pieces of the companies you use every day. And if it fails, if an oil giant becomes unstable, that's a risk for the entire world. Most of all, Saudi Arabia is the great test case, because it isn't alone. Russia, Nigeria, and much of the Gulf face the exact same question. Can a country built on one resource reinvent itself before that resource fades? That's the real lesson here. The resource curse. Being blessed with something valuable can actually trap you, because easy money removes the pressure to build anything else and leaves you hostage to a single price. So Saudi Arabia's grand gamble is really a race against two clocks: volatile prices today and a world moving past oil tomorrow. Watch three things: the non-oil share of its economy, the fate of NEOM, and the price of oil itself. Will it spend its way to freedom or run out of road? Either way, it's the most expensive economic experiment on the planet. If this made the news make more sense, that is exactly what this channel is for. The money story behind the headlines. Subscribe, and we'll break down the next one together.